What's happening, everybody? I hope you all had a fantastic weekend. We have another Sunday video coming at you for the 17th of July and the week ahead. Awesome action last week. Finally, I've been open about the fact that I've been trading smaller. I've been trading less. I've been, trying to just be hands off until my personal market returns. Now, that doesn't mean that everybody else couldn't have been absolutely smashing it. I mean, there was plenty of opportunities, plenty of just melt up markets. But for me, I just personally have a hard time kind of chasing a big gap up that just goes straight up all day. That's just me. And if I do, I'll join it, but it's not going to be, at any capacity, size wise. And so in the past, sometimes when the markets are like that, you try to like force situations to happen, and then you end up in a bad situation. So my one goal was just, what, the heck with it. It is what it is until my style returns. And, there's been, here and there's been a couple big days that sneak in there that give you the ability to size up and go for it. But otherwise, you've had to swing, you've had to chase moves, and I just have not as high conviction as I would like in order to really participate in any sizable capacity. So, like I said, last week, we had a lot of sizable opportunities. We had a lot of A-plus setups. We talked about Mullen, MULN, which was just an A-plus type setup off the open. We had the same exact setup on Nikola, NKLA. So I will dig into that in a moment. I know there was some others. Lance did a video about it, and oddly enough, like the same players, the same people that were interested in it. He had mentioned that SMB had a pod. It was their main watch, et cetera, et cetera. Lucas, it was his main watch. It was my main watch, and it just goes to kind of show that when the stars align and you get that perfect opportunity. There's a lot of eyeballs on it, all looking to do the same thing, which, kind of gives you two things to take away from that. One is, what did everybody see, and why was it such a high conviction trade for everybody? If you looked at it and it didn't really check a box for you or didn't really make sense, in my opinion, it's a great time for you to go back and say, why was it Nate's main watch? Why was it Lucas's main watch? Why was it Lance's main watch? Why was it SMB's main watch? And, reverse engineer and see whether or not you can get your own high conviction out of a setup like that. So just something to think about. And then on that same note, the second thing is, if everyone is on the same page and it's not doing what was expected, what does that tell you, right? It's going to be a crowded mess. So when these setups come, they need to either do what you are expecting or you need to size out. Because as we've said, I've mentioned and used this term a lot, but you're either going to be right or really, really, really wrong, right? So you do have time. You do have that opportunity to adjust, what the trade is, for you, whether it went from a great trade to, came back up and maybe you got too much, and you have a chance to behave. But the problem is most are like, it was just up so much and, maybe it'll come back down. But on names like this, especially Mullen and Nikola and all these other ones, I mean, it had 700 million shares traded the last 2 days. So yes, I'd love to see it unwind. But when there's a market that size, when there's so much volume, so much liquidity, everything gets kind of delayed, right? And that huge washout is going to get absorbed back up, right? So it's going to flush and come right back up. It breaks out, squeezes, slams right back down, right? So if you're a breakout buyer, you're getting smashed. If you're chasing it short or not covering, then it's swiping right back up and putting you in a position of like, I should have gotten out. So that was the thought process that I had going in with that, was any big flush is proactively covering, any big exhaustion move is, reactively, getting in there and shorting. So anyway, again, reverse engineer that. Why was it everybody's main radar? And you know what? If it makes sense to you, then great. You have a potential new tool, new setup, a new A+ setup for your arsenal. If you're looking at it and it's like, no, this is just not for me, that's fine. Most people try to force it when it's not for them. But for you, if it doesn't make sense and it's not really fitting with your style of comfort, if you'd rather long, or if you don't really kind of like reactively trading into a big move like that, then fine. Just don't trade it. And that's a perfectly good trade too. Just not trading it at all. So anyway, good unwinds all across the board. This is going to be short and sweet pre-discussion before I get into the scan, because I want to save time for a little bit of Mullen and NKLA review. So anyway, Traders for Cause early bird tickets sold out in 27 minutes. So that was great. And we have about 40 tickets or so. Last time I checked, every time I refresh, there's like two less. So those ones will trickle away and those ones will be gone. Like I said, there is a chance that there will be a few more, maybe a dozen or so, like later on, but it's going to be almost like a waiting list kind of thing. I can't guarantee that, but there are sometimes people, will sponsor 25K or 10K and they get X amount of tickets, but maybe they only bring, 20% or 30% of the allocated tickets they have. So anyway, as always, leave your key takeaway. And you can leave a key takeaway on the comment section on YouTube. You can leave it as a reply to my scan. And if you retweet and like that tweet, you're automatically entered to win t-shirt, scans, Icon Meals, IU. So Days 306 and John Lee Man 9333 on YouTube. You guys have the t-shirts for this week. And on Twitter, Dr. Gary Ninja and X Marvink. You've got the t-shirts for this week. And then I think the last piece that I kind of want to talk about before I get into, actually, there was a few questions that were sent in, but one of the things that I had said over the last couple weeks on Scan is, I can come prepared and I can have all these great ideas, but really, are we gapping up? Are we gapping down? And what is the market rewarding every single day, and what's the flavor of the week? And if a small cap goes, low float, then a lot of other low floats are going to go. If Mullen goes, then a lot of 10 to 20 cent stocks are going to go. If SPACs start to go, then a lot of SPACs will start to go. So there was a point in time where I had said, nightly scans are, for me, it's just staying in tune with what's happening in the market and where names are within their trend, or in during the move, but not so much of this is what I'm going to trade tomorrow. It was a little bit different of a market. I would say that this past week, scan prep was absolutely everything. You had AAOI, you had APLD. Those things would fall off your radar had you not been focused on scan and setting price alerts, things like that. Then there was also FNGR, Open, FUBO. Those were all the same setups. They're all looking relatively different, but steady up. And then there was no real correction. Maybe once, then starts to go straight up again. And for me, most people are trying to find the top, and then they get exhausted out, right? And then it slams down, and everybody's like, oh man, I missed it. I got to slam down. It gets crowded again. So there's been opportunities, APLD and AAOI, where, we've got that first flush, and then everybody expects, wants, needs more. They stick around, they stay. It's like, this doesn't make sense. It needs to pull back. And like I said, I reminded everybody, this is like a 2, 3, 4 month move in the making. So it's not going to go down without a fight. Yes. If there's negative news, negative filing, then, obviously something could come out and just, slam a name down. However, the more people that start to anticipate that it should fade and it doesn't, then we're going to start to have the inverse move where it starts to squeeze out. So then we had that secondary move on APLD We had that secondary move on AAOI, and then we had the unwind of that secondary squeeze on Friday. So that was perfect. And again, those are the types where if you were just kind of focused middle of the day, scans, things like that, you're not going to see those. That is coming prepared. That is doing the scans. You know, in the morning when you look at APLD and AAOI, it's like, whatever. It doesn't really look like much. But if you know what the daily chart looks like, if you know how it's reacted over the last week, then you know that week open that's down 10 cents and it's not going up today, you know that there's a huge, huge edge there for that potential unwind. And if not, it's worth that risk that you took, whether it's 10 cents, 20 cents, 30 cents, whatever you were risking off of. Obviously, your reward, your anticipated reward should be, at least 3x that, right? So if you're risking a dime, should be 30 cents downside. Risking $1 should be $3 downside. Or at least that's what you should be anticipating. It doesn't mean you're going to be right every time. That's what trading is, and you're going to have, you take a risk to be potentially right. But it should at least line up where risk does not equal reward, or reward does not equal risk. And then I've got some questions that were sent in, a couple good ones that I just figured would be good to touch base on, and then we'll get right into scan. And remember, if you are a newer trader and you nail something off the open, you nail something intraday, I know you want to hold and let it work, let that winner work, but there is a difference between building your account, building for income, and then building wealth later on. Letting the winner work and letting things grow and go. It can be a little bit premature in your career if you are just trying to give yourself that chance to make this work, trading. So when you are up a lot, when you do nail a trade, if you're not trimming some, you should potentially reevaluate that, because that's, you want to capture those gains, get as far away as possible from your starting point. It's no different than, Ed is working on a smaller account just to kind of showcase that, it can be done, and the small wins do add up. And I think that if he was in one and he's going for a home run, how many times would he have been up, X and then end up flat or at a loss? And so the idea is you get on the right side, take some, get on the right side, take some, get on the right side, take some, and slowly build that account up so that later on you can let the trades work. But you need to give yourself the best shot at letting those trades work. And with that comes, basically a padding from your starting point. So anyway, question for Sunday scan. If you're doing questions this week, what made you look for week open on CVNA last Monday on the red to green squeeze, as opposed to being cautious on the first signs of weakness? You got to think about how many, number one, look at the short interest, right, on CVNA. Number two, find somebody that's, bullish besides, the AMC ape type people. But, most people are negative on this thing. Most funds, most, notes and all that kind of stuff. I think one person put out a 50 target or something like that. But somebody had put out a 10. But most of the coverage is negative. And yet it continues to head higher, which, yeah, they're probably right. And same thing with AI. Probably doesn't belong up here. But it doesn't matter. Supply, demand, the demand is greater than the supply right now, and the supply is coming from shorts. And when the demand is greater than the supply, and the sellers are not selling, and it's only the shorts, if it continues higher, then you force those shorts to buy at higher prices. It's going to hang around longer than you think. We'll look back in 6 months and see a nice, slow, steady fade down, probably. But the reason why is on CVNA, if you look left, look at prior levels of support, most times it's holding them. And in the time that it does break, it's going to take a few chances. It's going to flush under, come back up, fail, come back up, fail, and it's going to continue to rotate out, And when it does that, that gives you the opportunity to rescale. But otherwise, you should just assume that it's going to hold that support. And when it holds that support, it's going to go up faster because a lot of people are on the wrong side. So that's why I came in with that. On something like next on Monday, given how it closed relatively strong. I'd actually be looking for a nice stuff move and potential unwind. Maybe the chart will start to look like AI. Mark sent in a question for Sunday Scan. Why do some names T12 while others do not? What I've noticed is most of these SPACs, the ones that don't necessarily have a company in them yet, or the ones that are T12ing, that MEOA, I think it was, ended up T12ing and then opened at, just above, like maybe 2 or 4% above the $10 mark. So what's happening is all these things with no float, somebody's coming in, creating, trapping the shorts, and, things end up T12ing. So I think that's why right now, there was a period of time when Amex would halt particular names and ask, why it's moving. They'd put out a PR, we don't know why, and then they'd open it back up. But it seems like they kind of just do these themes every now and then, try something new. But, I think on these particular ones, when these SPACs got out of hand, they shut it down quick. And I'm stuck in, I'm short, what is it, EDTX, I think? EDTX, yeah. I'm short that at 68, and I'm short GGAA at about 38 as well. So, I'll be paying interest on those, each day. They're not a sizable position, just in case. As you guys know, I don't want to trade those style, squeezers with any size at all. I want to have room in case I'm absolutely dead wrong. So that said, they did T12, and now, I'm going to have to pay interest. And then I put on Scan, Tony posted a bouncing ball analogy that we had gone over last video. So I appreciate, the tweets that I get when there's an aha moment for you guys. I like seeing that. I like seeing, what you took from Sunday. My goal always for Sunday videos is, what can you use Monday? What can you apply to your trading, right away, right on Monday? And so it's always awesome to see people, utilizing that, looking left and things like that. So let's get right into it, and we'll call it a Sunday Scan. All right, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that, you're in the right place. Hopefully you can apply, like I was saying, you can apply this stuff to Monday, to the week ahead, and utilize it in your trades. There's so many things last week that happened, so many great setups. This is just on a save chart. I wasn't even going to talk about it, but this setup should look familiar, right? And the biggest thing is to watch where these dip and rip candles kind of all come to, and where the soaking is, and if it starts to soak a little bit higher, and then also where it's exhausting at, right? And so, obviously you're going to have this outlier kind of move, and then once you have that exhaustion move, I start to get interested. You start to potentially dabble. You watch, where is it having trouble at? 1520s. You get that nice 1520 exhaustion, then consolidates at the lower end of the channel, and then finally breaks loose, and you have a fantastic failed follow through setup. This is the setup to memorize. And it just so happened to be, right in my face when I was going to share a couple other ones, but keep that in mind. I always try to show these things during the day, even if I don't trade them. I'm like, here's in this case a $15 example. Here's a $2 example. Here's a $100 example. And as you start to see them in different time frames and different setups, you can start to apply it to your own trading. And something like this, obviously I missed this one unfortunately, but you can see all this support in this 473 range or so. But you can see once it starts to peak out, fail to follow through, we have a nice unwind. You can also see right here as it breaks the last piece of support, completely unwinds. And lines don't need to be perfect, but it's just a visual representation or a visual reminder that says, hey, why are you sizing? There's no reason to size. You're supposed to wait for this line. And that helps me because I used to be one of those where it's like, put some on, put some more on, put some more on, get blown out, unwinds. Guess what? I stopped here. There's the unwind. Why? Because I exhausted myself on the way up. You draw these lines, I don't care how many you draw, but it will remind you why you sizing above that line. I want to be on the same side as sellers. So let's get to the main stuff that I want to talk about. I'll start with Mullen and Nicola. So we obviously had this huge unwind over here. I mean, the huge unwind on the daily, and then a huge parabolic, I meant. So if you go back, so you had this huge kind of move straight up, straight up, straight up, and then this huge gap day. And then this should look pretty familiar to what we just discussed. We had the nice consolidation, and then you find the support. Where's the support? The support level is where things are going to start to change, right? You can take a trade in between, and you can do exceptionally well, but you have to be proactive. Otherwise, there is that chance that it just keeps going up, right? And we've seen that multiple times. So for me, I always look to see where there's an exhaustion point. You had one over here. That's the first spot. So I'm going to put a line. Then I look for where it gets caught, if it dips and rips. And, in that case, it's this pullback right over here, 29. Once 29 gives way, retest, starts to stay heavy at VWAP, then we obviously have a nice steady unwind. Same look as AONQ, but same sort of setup as what we were looking for on NKLA. So NKLA has a huge move. We get that big gap up. Had this not had as big of a gap up, then you might not have as many gap sellers that are now, adding inventory to the pressure, right? So sometimes when things are just kind of grinding, then you have the weak open grinds, that can last a long time. When you have a huge move and then a major gap up, there's a lot of people like, oh man, this is up a lot, it's starting to go down, I'm going to go ahead and take it off, right? And so it kind of triggers people to sell. So now instead of having weak opens and rip and weak opens and rip, where, if you wanted to sell, you probably would have sold, but you start to become price insensitive because, it's just weak and comes back, weak comes back. This one, straight up, big gap up, starts to go down. Oh no, I got to sell. So now it's not just shorts that are hammering it, it's sellers, and that's exactly what you want. But we had that same setup, and we had a big day, prior day, just like Mullen. Then we had the gap up. You want to start to kind of focus on, how it looks and where the important points are. And for me, it was that 280 range. And, you can kind of see that it was consolidating around this 270. And then when it flushed off the open, that was right around that 250 mark or so, right? Or maybe around 260s. So you can look left. You can see that all of these kind of consolidation points sort of line up over here. Then we've got this exhaustion move. So if you are not prepared to go for a little bit of a ride, then you should not have a starter on, right? So when I started in, for example, and I think the high was like 295 or so, something like that, 290 and change. My goal was a 3 to 320 parabolic. Maybe it goes a little bit higher, maybe not. But if you start in at 280s and you're going to panic at 310, you should not be in the trade, right? But when I start in, I'm hopeful for a 3 to 320. In the event that I'm wrong, or not wrong, but in the event that it doesn't, it just stuffs and it stays heavy, at least I have a starting position and I can then add faster and faster and faster. In the event that I am wrong and it goes, through 320s, at least I'm not sized up to a position where I'm freaking out. So same sort of concept. Same, as Mullen, the highest volume days, things started to get a little out of hand. Things maybe happened a little bit too much, too fast. You can see the difference between the volume, compared to the other days, right? So over here, and the same thing with NKLA, same deal. You can see the volume. Also this day, if you guys remember, we traded that day too. Same exact setup. Now, I traded NKLA on Thursday twice. Maybe 3 times. Yeah, 3 times. One was relatively flat, no real size. Second time I lost a dime. Third time was kind of flat. And I said, you know what? The one thing I'm going to do is just not pre-exhaust. Because same thing happened this time. I was early twice. 130s, I covered like 135s. I tried 140s, I covered like 140s, pretty much flattish, plus or minus a dime. You know, it was nothing compared to when it finally did squeeze out. And it gave me that opportunity at 180s or whatever it was. Yeah, 180s. And then it just came apart 40 cents in like 2 minutes. And so the biggest thing is do not take these trades away from you, you know, by having that fear that you're going to miss the fade. You're not going to miss the fade. And if you do, so be it. There's a ton more. So that's that. You can see all the similarities between them. And like I said, there was so many eyes on that same sort of thought process, same sort of idea that, you know, in these situations, Mullen and NKLA, I feel a lot safer just because it's not a super crowded, not crowded, a super thin name. These are thick names. Had all those parties been interested and it was 1 million, 2 million share float and it did not go down, that's when you need to be like, uh-oh, I gotta be aware. In this case, super thick name, high float, and very, not to say it can't happen, but much lower chance of that outlier, you know, kind of crazy move. That said, if it does not do what you're expecting, get out, reevaluate. And it matters for sure, especially when you have all those eyes on it doing the same thing. And then the other point that I was making a little bit earlier is just, you know, don't lose things off of radar. FNGR, AAOI, APLD, right? They all look a little bit the same. OPEN, no real pullback. There was one over here, but, you know, maybe getting a little ahead of itself. Same thing with FUBO, FUBO. Also, we talked about this last week. I mean, this is not by chance. It literally went, let's see, this was 325.99 and 327. So, I mean, within a penny-ish of the prior level of resistance before it caved down to $1, right? So this high was, 325.99, and this high was 327. So 1 penny pulls back. It's not going to happen every single time, but there is a high probability that it will have trouble at the same spot. So that's the idea with that one. And like I said, you know, we had been monitoring AAOI, we had been monitoring FNGR, and had, you know, I not had them on scan and come prepared with these with price alerts, then I would have missed these opportunities. It might not even look like much to you. And if you weren't prepared, it won't look like anything to you. But these were really big moves, really big opportunities, and in a great way to level up. So let's get into the scan for the week ahead. As always, main watches are the most volume, most, you know, the highest conviction type of trades for me that I feel like I'm gonna more than likely trade. The other ones, you know, are watches that I want to, you know, wait for failed follow through. The other ones are continuation, potential, you know, continued breakout. Then I wanted to do one more comment on UTME before I get into the main watches. Forgot about that. So this is an example, you know, this is like that cleanup day we talked about. This is one of those Chinese liquidation type trades. It's got a history of it. They did a reverse split. This is what I call a cleanup day. Ton of volume, rips it up, consolidates, lets it kind of die off, ramps it up again. You can see the volume associated with it. And then they start this kind of perpetual squeeze almost because they've created all this volume, and shorts, you know they typically just come right back down. And then over time, they just sort of start to kind of try to create these traps. You get this fake breakout over here, and then it starts to fade off. They're trying to churn, and create a trap. If you look, 60,000 volume, 20,000 volume on the 10th. Next day, it's 2 million. And next day, almost 12 million shares. So it goes from 20,000 shares to 12 million shares almost. So it's all wash trading. It's all back and forth to make me and you think like, wow, this thing's super liquid. Well, instead of trading 500 shares or 1,000 shares, because normally it has 20,000 volume, heck, I'm going to trade 20, 30,000 shares. Well, guess what? You just traded what was basically the entire volume on a prior day. So in the event that they want to toy with this thing, once they know, they're like, all right, we own more than the float. And there's people that are probably trading based off the 15 million shares that's traded the last couple days. Based on that size, many might not realize that it's wash volume. And all of a sudden they walk it up. This thing is thin as heck. So be aware of that. Yeah, there's a good chance it's going to be down 80% at some point. But that does not mean that they can't kind of create the churn, get shorts in there, get them comfortable, build that short position, and then make them pay. So yes, there's a good chance it's going to be down 80% at some point. We just don't know. Is it going to go to 5, 10, 20 first, or is it just going to pull back? And if you guys remember, we had a big conversation about this top, and this was very, very similar before the move, where it was just wash. Then they had the fake flush, and then they just started the washing machine every single day, about 1 million shares, making people think that, you know, it was super, super liquid, but really they probably own the entire float. Churn. Me and you look at it, wow, it's got 1 million shares a day. I'm going to trade 20, 30,000 shares, no problem. And guess what? There was no real market, and they controlled the whole thing, and then they made everybody pay. So anyway, same concept. Not saying it's going to the moon. I'm just saying that none of this is real. This right here, you can see all the volumes associated with it. People slam into it, and then they swipe it back up. So anybody that is price sensitive, the other reason why they do this, if you think about it and you think about top, if you had a big position and you were overloaded and you see this churn and slam, churn, slam, but they keep on, catching it. At some point, you might be like, screw it. I'm going to sell next time. And you sell out, and then guess what? There's no real sellers. They're testing the sellers right now. They're seeing who is price sensitive, and then they'll end up just pulling the either pulling the offers and running it up, or hammering the bids and slamming it down 80%. So we'll see. But anyway, KSCP. This should look extremely familiar to the charts that we are setting. We look for setups. I would not get overconfident in the fact that this has to pull back. It does have a huge history of, wild moves, and who knows? It's all possible that this can continue to go. So I am not of the mindset that this thing can just, unwind like crazy. I think that people are a little bit maybe premature on the short side. I would be hopeful for at least a 220 gap, but I'm thinking, maybe 230, 250 parabolic, maybe even higher. And then I want to see that failed follow through setup. It can flush. That doesn't mean slam into it. I want to see it come back up, fail, come back up, fail. You're not going to miss this over one candle. So remember that. But so far, it's definitely speeding up. It did have a dip and rip day over here, which I feel like trapped. So I do think it could have a little bit more longevity than people think. That said, it is my main watch for a short. So I am hopeful that it continues to head higher, and then eventually short it. NKLA, fantastic opportunity. I do hope that we have another opportunity here, pretty much closed flat. Like I had talked about, anytime these things have this much volume trumps all. It doesn't. It's not a small cap. It's not just going to be like, boop, all done. It's going to have 9 lives. And it's gonna hang around longer than you think, and then when you finally are like, screw it, it's gonna pull back and be done. All right, what else? So NKLA, same deal. I mean, higher the better. Let's see. I mean, ideally, it kind of pushes up towards the 240s to maybe VWAP level, and then fades back down. I'm not super excited like I was. One of the mistakes that I've made in the past, and many traders make, is absolute, home run on Friday, and then you go back to the well and you try to do the same thing again. Liquidity is going to be different. So more important than ever, react to trade off open, 10 a.m. plus. Riot, Mara, beautiful. I prefer those over Coin. Coin obviously gave a great trade too, and oddly enough, what do you know? Same setup that we talked about on IONQ to start this entire video, right? Nice failed follow through setup. You've got the dip and rip candles. You kind of wait for it to start to get a little toppy, and then breaks down under that VWAP level, which also coincides with the support, and that was it. Failed follow through. So Riot, same kind of situation, and Mara and anybody that was paying attention obviously saw the shorts there. This is even simpler. Again, these are all in hindsight, but this was trades that I did take, and I'll have Damien put some of the examples of the trades. But exhaustion line, at 1990s, $20 or so, and then 1950s, and then as you see, once it's under that level, that's it. And we got the confirmation. If you didn't participate there, you've got another one right over here, and then it starts to break down under this support, and then bam, same thing, same concept over and over and over again. So it's not about the company. It's not about, trying to force a trade. It's waiting for these setups to fall into your wheelhouse. And, maybe a parabolic move is for you. Maybe a failed follow through setup is for you. But it's all about you figuring out what works for you. Not for me, not for anybody else. And how can you compound gains? Next up, failed follow through section. It's all the same stuff. CCL, AI, UPST. These are all nice big charts. I do not have any individual thoughts on each one. It's all really, I want to see them pop up some morning shove or a week open, but an attempt at a rebound, like a swipe test, fail, swipe test, fail, and then some sort of unwind. We've got Fubo, we've got open, all the same stuff that we've been watching. Most people take off radar. I don't. AAOI, APLD, same deal. There's still a lot to be made here. It's just about not forgetting when everybody else forgets. So the reason why you get, kind of chopped up on a lot of these other names is because everybody's focused on the same one. And like I said, when you're either going to be really right or really, really wrong. And so when everybody is focused on the same ones and the move happens, whatever, then they move on. They're no longer watching these. The key, especially if you're building an account, is keep these ones on radar. They're going to be less, pinball, less like whipsaw, knee-jerk reactions, all that, because the crowd has left. And so now you just need the trend to agree with you. And if it does, then go for it. And then the continuation side, which is, longs that I either have or that I'm looking for. And FREQ was one. I held that one over. Nice consolidation all day right over here at this basically 65 mark. And it was an idea for flushes. And, again, if you were trading it, the concept is, any good, parabolic moves, you should obviously be locking in around a core so you can potentially take the risk of either holding overnight or buying a flush. But for me, I feel like this has the potential to really go. I had great action, great volume, but we would need to see more information. So it could be like this on KSCP, where it kind of hangs out for a couple days and then goes. So yes, I'm long. Yes, I sold some into the rip, but I am looking for it to consolidate, start to build over the next couple days. And if it does, then I'm not saying it's the next KSCP, but that's what an ideal setup. And I don't even care. I'm not even talking about going to $2. I'm just talking about dips get absorbed, and then maybe push, 80 to $1, $1.20, something like that. If not, that's fine. But we need to see how it reacts. RDHL, nice liquidity type trap on the daily. That was a long that I took. And so you got the big volume day, you got the dip and the rip, and then liquidity trap playing out well. And then UTME we already talked about. So UTME, not something that I necessarily would trade yet, but just be familiar with it. Even if it tanks, if it stays heavy, I'm interested that day. I don't want to try to nail the top, and I want to have an open mind on this thing just because we've seen this before. The writing's on the wall. So there is not really an edge, long or short, but there will be an edge. And, just stay cautious. But this is exactly what they did on top, and created the appearance that there was something there that isn't. And we'll see how they do with this one. So that's it. Again, Traders for a Cause tickets, it's probably like 39 left at this point. Because like I said, every time I refresh, there's always like two less. But any questions, reach out. Zach at traders, the number 4, acause.org. The room block will be sent to everybody shortly, heavily discounted and way cheaper than prior years, which is great because I know it can add up. And that's it. So have a great rest of the weekend, and we will see you in the room on Monday.